we are about 6 months into the effects of the pandemic here in the United States, and new data is showing that we are not anywhere close to seeing a resurgence in office traffic. Data from Brevo, a company that provides access control systems for a lot of offices here around the country, shows that a lot of people coming back into the office have not anywhere come close to the levels we saw before the pandemic hit. Still about half of the office traffic that we're used to seeing here, at least when it comes to normal traditional offices. Is a little bit of a different story for manufacturing and warehouse locations. But here to discuss that trend with us is the CTO of Brevo, Jeff Nielsen, joins us now. And Jeff, thanks so much for taking the time to chat this, because there's a lot of debate right now about whether or not we're going to see a complete return to the idea of everyone going back to the office. We're hearing that when it comes to some of these Wall Street firms right now. But just at 50% 6 months in, I mean, what does that tell you about where we're at in this return to the office?
Yeah, I think there was this initial optimism back in April, May. This is going to be a short-term thing. We'll be back to normal by end of the summer, maybe the end of the year. And what we see in this data certainly is that no one is rushing to go back to the normal pattern of office usage. Certainly in traditional offices like the one I work in. As you mentioned, we track office usage by access control data. So Brevo is the underlying software and hardware that figures out whether someone's allowed to get in a door or not, whether that's a door at your commercial office building or a multifamily residence or anything like that. So our data is based on the number of people, swiping a card or a mobile credential to get into a space. And as you alluded to, across the country, we're just barely above 50%. We have something on our website called the Commercial Reopening Index, which looks at the total number of people using any kind of credential to go into an office space. And we have that at 50% or 57%, excuse me, as of last week. So that's 57% of the quote unquote normal traffic we were seeing in January and February. That's our baseline.
Yeah, and I mentioned that we did see, or I guess your data shows a higher uptick in terms of manufacturing and warehouse locations, but also interesting. Your data shows a difference when it comes to regions as well. And obviously states have been different about their reopening plans here, but talk to me about what you're seeing regionally, as I was kind of surprised to see retail locations in Miami well above that 50% return rate. So talk to me about that.
Yeah, absolutely. Absolutely. That's one of the interesting things that stuck out to many of us that looked at this data, that, for retail workers, that's the folks that are unlocking and locking the spaces, that's right at about 90% of where we were in Miami. Certainly, if you look at places like Houston and Los Angeles, they also have retail workers at about 75% of the pre-pandemic levels. But that's certainly not true across the board. To pick a counter example, in San Francisco, my son actually works there in the Bay Area. They're down at 75%, of less than the normal capacity, even for retail.
Yeah, and retail.
So yeah, definitely.
Retail would make sense too, because you got to meet customers in the store. I mean, if that's where you do business, you have to do it there. But if you're an office worker and you can do most of your job from home, as I am currently doing, as we're all doing here at Yahoo Finance, we can do that. But when we think about what the recovery at this point, 6 months in, 50% traditional office workers back in the office, what would you predict? Because obviously commercial real estate here is a big question mark, and something that a lot of investors are watching when we think about 1 year, 2 years down the road. What are you thinking about the recovery here? Do you think that the work from home move is going to stay permanent 2 years down the road?
Well, I don't know that I have any special qualifications to speculate on that, but certainly it's going to be for regular office spaces. Everything we're seeing says it's going to be very, very slow. I don't know when we'll see the number of people unlocking doors with a physical credential like they were back in January or February. That could be a couple of years off. People are definitely, with the length of time that this thing's been going on, are rethinking what needs to be done together. When do we really need to gather versus when can we do just as fine over a video conference? So I think you will see companies, and we've seen some of this in the headlines, rethinking how much space they need to provide for their employees. You'll see different patterns where instead of the 5 days a week being a normal pattern, maybe 2 days a week will be more the norm, or 1 day a week. Maybe teams get together once a week. One of my colleagues commented that maybe we're going to switch. Used to have an offsite meeting when you wanted to get together and get stuff done. Maybe that'll flip, and now that'll be the on-site meeting. When we need to get together to put our heads together, we'll have our annual on-site.
I have a friend whose corporate retreat was just virtual, and I think a lot of people were disappointed with that. It's already become the normal de facto office now here too, so not a lot coming from that. But the data showing an interesting return here, I guess, at 50%, 6 months in.
Definitely.
Jeff Nielsen, Brivo CTO, appreciate you joining us. Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.